$843. That is your balance right now. Not your savings, your balance. You check it at 11:52 p.m. Lying on a mattress on the floor because the bed frame is not a priority right now. You check it again at 11:53. The number does not change. You have $27,000 in student debt, $3,800 on a credit card, and a direct deposit hitting Friday that is already gone before it arrives. You are 24 years old, and this is not the bottom. This is just the beginning. The machine opens every morning. It does not ask if you are ready. It does not ask what it will cost you. It just opens. And whoever shows up, consistently, patiently, without stopping, they compound. The money compounds. And so does everything else. Level 1, 0, $843, age 24. You do not talk about money. Nobody does at this level. But everybody is running the same numbers. Every grocery run is a calculation. You put the name brand pasta back. You split a streaming password with someone you do not particularly like anymore because canceling feels like falling behind. This is what zero feels like. Not dramatic, not cinematic, just a low, constant hum of arithmetic running underneath everything you do. You watch your bank app more than your messages. You know your account number by heart. You move $150 to savings on the 3rd. You move it back on the 11th. At this level, money is not a tool. Money is the air. Either you have enough or you are already suffocating. And you cannot always tell which one it is. The first rule, at zero, every financial decision is emotional, and emotional decisions compound in the wrong direction. Level 2, the first move, $1,200 saved. Age 25. Something moves in the right direction. You get a raise. Not a big one. $5,400 a year before tax. It lands as $312 extra a month. You feel wealthy for approximately one afternoon. Then the transmission needs $1,100. You learn the first real lesson. Expenses expand to meet whatever space you create. But then something happens. You pay off your smallest card, $1,400. You screenshot the zero balance. You send it to nobody because nobody would understand why this screenshot means what it means. But it means everything because for the first time, a number moved in the right direction because of a decision you made. That is the beginning. Level 3, the 5-figure shock, $12,000 saved, age 26. You have never seen this number before. You crossed $10,000 in savings for the first time at 26. You have never had 5 figures, not once in your life. You check the balance every day for 2 weeks, not from anxiety this time, from disbelief. You do not do anything with it. You just let it sit there. The psychological weight of $10,000 when you have never had it is completely disproportionate to the number itself. You feel like a different category of person. You are not, but you feel it. You start reading, not motivation, not self-help, actual books about how money moves. You learn what an index fund is. You open a brokerage account and stare at it for 3 weeks before you put anything in. You invest $2,000. The market drops the next day. You almost pull it out. You don't. This is the moment you decide. Does fear run your decisions, or do you? Level 4, the Competence Plateau, $43,000 net worth, age 29. You are doing everything right. It is not enough. You are making $71,000 a year. You have $43,000 saved. A Roth IRA you are actually contributing to. An emergency fund. By every standard you were given, you are winning. Max, the 401k, build the cushion. Avoid lifestyle creep. You are doing all of it. And then, one night at midnight, you open a spreadsheet and run the numbers honestly. All the way out. You type in your income, your savings rate, your projected returns over 35 years, and you stare at the number at the end. It is fine. It is enough. It is not what you want. You close the spreadsheet. You open it again. The number does not change. The second rule, a salary is a ceiling dressed up as a floor. The moment you see it clearly, you cannot unsee it. Level 5, the side engine, $83,000 net worth, age 31. You stop waiting for permission. You start something on weekends. You do not call it a business. It is just a thing that makes $300 a month, then $800, then $1,900. You tell almost nobody. You reinvest everything for 11 months. You eat the same lunches. You upgrade nothing. Your net worth crosses $83,000, then $120,000. You start feeling the gap between where you are and where a salary alone would have taken you. That gap is where the leverage lives. Your investments return $4,200 in a single year without you doing anything. You have months where your side income is higher than your paycheck. You know what an asset is now, not theoretically, physically. Something that earns while you sleep. Your relationship with time changes. You start measuring every hour differently. Every hour spent on something that does not compound is an hour the machine is not running. Level 6, saying no, $160,000 net worth. Age 32. The word costs you relationships. You cross $150,000 in net worth at 32. A rental property with $38,000 in equity. A brokerage account at $67,000. A business generating $5,800 a month. You still drive the same car. You tell nobody about any of this. You have noticed? Talking about money at this level makes people strange, either envious or dismissive. Neither is useful. You start saying no. A destination wedding that requires liquidating something. A group trip where everyone splits equally and you would be subsidizing 3 people. A business idea from a friend who does not understand cash flow. No, no, no. You feel the friction in the relationships. You feel it and you say no anyway. The third rule, stop spending money to maintain relationships. Start protecting capital to build options. The people who understand this will still be there. The ones who don't, we're never really there for you. Level 7, when money has a personality. $310,000. Age 34. You stop fearing loss. At $310,000, money starts having preferences. It wants to go certain places. It resists others. You have one investment return $24,000 in 9 months. You have one lose $11,000. You do not panic about the loss. Not because you do not care about $11,000, you do, but because you understand now. This is the cost of being in the game. You do not pull back, you reposition. This is what people at the bottom do not understand about people near the top. They think the top is about avoiding risk. It is not. It is about choosing which risks are worth sitting with. The fourth rule, below $500,000, you are buying assets. Above it, assets start buying each other. You can feel yourself getting close. Level 8, the threshold, $1 million. Age 37. A Tuesday. Nothing ceremonial. $670,000. $840,000. $960,000. You restructure the business. Bring in a partner. Exit one investment and roll the proceeds into something larger. You stop sleeping as well as you used to. Not from stress, from intensity. You are running scenarios in the shower, sending emails at 5:15 a.m. to people in different time zones. You turn down a job offer for $190,000 a year. Your parents do not understand. You tell them it did not feel right. That is partially true. Then it happens. A Tuesday, your brokerage updates and the number is $1 million. You sit with it for a moment. You thought you would feel different. You thought there would be something. There is quiet satisfaction. And then, almost immediately, it is not enough. Not in a frantic way. In a clear, practical way. $1 million at a 4% withdrawal rate is $40,000 a year. That is not freedom. That is a starting point. The milestone was never the destination. It was the proof of concept. Level 9. When money is just a resource, $2,400,000. Age 40. The anxiety is finally gone. At $2.4 million, money stops being a source of anxiety. For the first time in your adult life, it is simply a resource. The way time is a resource. The way attention is a resource. You do not think about your checking balance. You think about allocation. Where is the capital positioned? What is its return profile? What are you not seeing? You hire a wealth manager. Then fire him when you realize you understand your situation better than he does. You find someone better, charges more, talks less, has clients you have heard of. Your business does $3.8 million in revenue. You own 2 properties with $410,000 in combined equity. Your portfolio sits at $1.7 million. You take a 3-week trip. You do not check email for 6 days of it. This is the thing people cannot buy at lower levels. Not the trip, the 6 days. The 5th rule, wealth is not what you accumulate. It is what you no longer have to do. Level 10, the game changes texture, $5,100,000. Age 43, you are moving capital now. At $5 million, you are no longer working for money. You are moving it. The distinction sounds small. It is enormous. You are in a deal that will return $900,000 in 14 months. You are in another that might return nothing. You understand the relationship between them. One de-risks the other. The correlation between them is the actual trade. This is not a sentence you could have understood 4 years ago. You start meeting people operating at $30 million, $60 million. You study them the way you studied the $10,000 mark from zero. You watch how they think, not what they own, how they think. The pace is different. The patience is longer. They are not trying to win each hand. They are trying to stay in the game longer than everyone else at the table. Level 11. The rooms, $15 million. Age 47. You are at the table. At $15 million, you walk into rooms you used to only read about, not celebrity rooms. Rooms where decisions are made. A meeting with a family office managing $800 million who wants to co-invest alongside you. A call with a private equity firm looking for operating partners on a platform acquisition. You are at the table not as a courtesy, but because your capital and your pattern recognition are genuinely useful to the people in the room. That is a different experience of being useful, a different experience of being powerful. Level 12, the distance, $32 million. Age 54. The gap between decisions and consequences widens. A company you are invested in restructures its workforce, 160 people. You know the CFO. You have had dinner with him twice. You do not call him about the layoffs. You review the cap table. You hold the company's margin profile improves. Your position increases in value. You don't feel good about it. You don't feel bad about it. Not for long. You feel the distance. The thing that grows quietly as the numbers grow, the gap between your decisions and their consequences, it widens. And you do not resist it. This is the part nobody tells you about. Level 13. The machine runs without you, $10 million plus. Age 61. You position. You do not produce. Your net worth crosses $10 million. You have structures that will outlive you, a trust that protects the assets, a foundation, people executing decisions inside frameworks you built a decade ago. You own pieces of 14 companies. You could leave for 6 months, and the machine would run. That is what the machine was always for. Capital moves because you breathe. The closing, where it begins. And somewhere in this city right now, there is a 24-year-old opening a banking app at midnight. His balance is $843. He is in a grocery store doing the math in his head. He puts the good coffee back, gets the store brand. He thinks this is a story about money. He thinks if he just makes more of it, something will resolve. He does not know yet what has to resolve. He does not know what it will cost. Not in dollars, in distance, in the gap that opens between who you are at the beginning and who you have to become to reach the end. The machine does not ask if you are ready, does not ask if the trade is worth it. It opens every morning, and whoever shows up, consistently, patiently, without flinching, without stopping to ask the question everyone else is asking, they compound. The money compounds, and so does everything else. The balance is $843. It always starts there. It always will.